Mr. Gaurang, Shah, Senior Vice President at Geojit Financial Services. Sir, first of all, thank you for joining us here on News9. Now, a choppy start to 2024. Nifty gave up in the somewhere around 200 points or so midweek, but we saw a good bit of recovery in the latter half of the week. But this week, what are the factors that will be in focus?
Thank you, Suyash, and morning to all of you all. So, I think not much will happen this week. Possibly next week onwards is what we'll see the Q3 numbers unfold for this financial year, and I think that's where the focus is going to be as far as the fundamentals of the market are concerned. And our consensus on the Q3 earnings is that I'm talking about overall. That it's going to be better than what we've seen in second quarter. And possibly third quarter will have more reasons to revise the target upwards on fallback of the numbers that we'll see and dissect. We are in a consolidation zone this week. We'll possibly, spend a large part of this week consolidating in the range of about 21,600 on the lower side, 21,800, 21,750, 21,800 on the higher side. But that's going to be a broad range for the market wherein we'll oscillate between these two levels. And all opportunities on the downside should be focused on investment ideas rather than trading because it can turn out to be a little bit choppy. And investment themes are plenty to look at, Suyash, from long-term perspective. So it's better that, some days and weeks, it is better to see the market consolidate, see some profit booking so that it gives opportunity for all those lost investors who are possibly waiting on the sideline. I think whatever triggers that are witnessed in terms of data points are nothing to complain about. They are in line with expectation or better. So we should spend some time consolidating. This is the overall view of the market this week.
All right. And Gaurang, you were mentioning that there are certain pockets which look attractive at this point in time because we have seen a sector rotation take place, over the course of last 3-4 months. It started with the auto pack, pharma and, IT drove the markets higher later on, and now it's the banks' turn. What are some of the themes that could, drive markets higher from here on?
Banking, both public as well as private, strong NBFCs. And the reason behind it is over the last week or 10 days, we have heard the advances, deposits, and loan book numbers. And if you just go by that, you can possibly have a very, overall idea as to how the numbers are going to look for the entire banking and finance. And lot of these companies have actually come to the market to raise funds. Case in point, Bajaj Finance came to the market, and I think in excess of 8,500 crores is what they have raised, giving you an indication that they are very optimistic about the loan book growth. And at the same time, you have gross and net NPA coming down, provisioning coming down. Interest rates have been stable for the last 6 credit policies. At Geojit, we believe first 3 months of calendar 24, that is Jan, Feb, March, if all goes well, and if inflation is something that doesn't raise its ugly head, then we can possibly brace ourselves for some small bit of rate cut, subject to provided all the data points are supported. Second one is autos. Third one would be IT. As always, we've been positive on IT, and I think there should be a better shade and color that the IT sector has to tell us in terms of numbers. Metal, cement would be the other two pack, and I have also spoken about 3 sectors that we primarily would want to focus on. That is defense, power generation, transmission and distribution, power equipments, and railways. I think these 3 sectors are in for a long haul of good orders coming in, and their capability of executing the order book would translate into earning visibility.
All right. And Gaurang, you just mentioned that, inflation, at least the softening of inflation will be keenly tracked. But, this crisis that's brewing in the Red Sea, is that a cause of concern? Because the markets have not really factored that in much. We have not seen a big correction since the beginning of these disruptions.
So our external affairs minister was in Moscow and an alternative route has been planned with respect to transportation. And my sense is, despite of these news flows, you are having crude Brent below $80 a barrel. This morning, somewhere close to about 77 or $78 a barrel.
Yes.
And MX is trading at about, I think, 73 or $74 a barrel.
Hmm.
And I think we have managed to safeguard our energy security, Suyash. And the government has got all the capable people and minds to make that sure. So I don't think this particular event of in the Red Sea would play a major spoil sport in terms of crude oil prices jumping up. And I think countries and alliances would make sure that that kind of a situation does not arise. This with a caveat that any major disruption in the global supply pipeline of crude oil can lead to issues not only with India but also with the rest of the world.
Good morning, Gaurang. You mentioned banking, both PSUs and private, as the sectors to look at. Now, a little background for the viewers before I ask you my question. India was one of the biggest enticers of foreign portfolio investments and investors in the year 2023. And the trend seems to continue. As of Friday, that is the 5th of Jan, FPI has purchased 1700 crores of rupees worth of Indian stocks. FPI has bought equities worth 1.77 lakh crores in the year 2023. This is the highest ever in India's history. 1/3 of all those investments happened in the month of December. This, of course, after the confidence that the Fed will not increase rates, may actually bring down rates. 45% of total inflows in December happened in the financial sector, amounting to rupees 29,168 crores in December itself. That is staggering. Curiously, FPIs had withdrawn around 3,993 from the financial sector in November. But this was followed by the sector that followed was the capital goods sector with 8,674 crores in the November-December, IT with 5,997, and then healthcare, construction, and consumer services. My question to you: one, is this trend going to continue? And what was the reason of the little bit of a flip-flop that in November, the financial sector actually saw a withdrawal of foreign portfolio investments and a big jump in the month of December?
Morning to you also. So, to answer your question in one line, all these data points that you rightly mentioned, I think will beat all those numbers in 2024. It's going to be a little bit patience given the fact that we have a big event in form of general election. But I think if you have to believe the tailwind with respect to the 5 state election result that we saw last year, then I think possibly you are getting some kind of an indication. Point number one. Point number two, I think I was reading a report this morning. India has just beaten Taiwan in MSCI Emerging Market Index with respect to weightage as well as performance, and we are second to China. And if we are going to clock a run rate of 7% plus GDP growth rate, and if more and more financial inclusion is going to be unfolding, and despite of all these data that you just told me in terms of flows coming in and little bit of flows going out, last year if you go to see somewhere around second half of 2023, there was a huge outflow of foreign institutional investors from India on fallback of whatever Fed had told us at that point of time. So somewhere wisdom is awakening with foreign institutional investors and FPI investors that if you have to look at emerging market, then you cannot ignore India. And with my earlier conversation with Suyash, I had mentioned this statement that you can hate India, but you cannot ignore India. So I'm quite sure that possibly post the big event this year, general election, all these numbers that you've spoken about in 2023 will be broken to a record high.
That's the view coming in from Gaurang Shah. Sir, always a pleasure speaking to you. Thank you for joining us here on News 9.
Thank you so much. Thank you.